Good morning. Happy Wednesday, the 5th of May. I'm Jessica Ramia, Senior Market Analyst with Bell Direct. Apologies for the lateness of this morning, Bell, but I really want to hone in on several key factors that I think you should consider. But firstly, let's start with a wrap-up of overseas markets. US stocks pulled back overnight, seeing their biggest one-day slide since March. The S&P 500 lost 0.7%, and the Nasdaq down 1.9%, while the Dow Jones held its head above water, rising slightly. So while the broad pullback, well, a couple of key reasons which I wanted to highlight. Firstly, the US Treasury Secretary Janet Yellen said that interest rates may have to somewhat rise to keep the economy from overheating. Now, this means companies with high debt levels are likely to see a rise in costs. So that's why we saw US tech stocks pull back. Apple, the biggest stock in the US, fell 3.5%. Netflix down 1.2%. Microsoft down 1.6%. Now, the second reason for the pullback, although US stocks are expected to broadly rise 10% in a year because the global economy is rebounding, mobility is improving, but now the technical indicators are suggesting that US tech stocks will likely see a short-term pullback. The Nasdaq has now fallen for 6 consecutive days, pulling it back off its record highs because in investors' minds, US stocks look comparatively expensive compared to their earnings, known as price-to-earnings ratios or PEs. And this is why they're thinking the stocks are expensive. Well, because payouts, earnings, dividends haven't really caught up yet. So in the short term, these factors are pressuring the Nasdaq into almost a technical downtrend, suggesting the Nasdaq is likely to fall further potentially. So what to watch today for us? Well, the futures are indicating the ASX 200 will likely see a pullback of 0.4%. Largely, tech stocks will be in focus today, expected to see a pullback too. What's also important to note, though, if you are a long-term investor like me, you could ride the wave. But if you're a short-term investor, it might be worthwhile considering taking some tech stock profits and rotating to stocks with stronger balance sheets. Now, speaking of, ANZ has just handed down their half-year results, and ANZ shares are likely to lift at the open because shareholders like what they see. ANZ shares are likely to lift 0.6% to $29 at the open. Now, ANZ just reported that their half-year profit almost rose 50% in the half year to $2.9 billion. And that was thanks to an improving economic outlook and increase in loans as well. Now, of note, ANZ costs fell 2% and it declared a dividend of 70 cents per share. That's a rise of 35%. Also keep in mind of significance and separately, the UK is planning to lift restrictions from the 17th of May. So this means it's worthwhile checking out stocks on the ASX that operate in the UK. Take Virgin Money, for instance. It's trading 55% higher this year to date and is the ASX 200's best performer so far this year. Separately, keep an eye on AMC, IAP and VMU, who also are due to hand down reports today. Bank of Queensland goes ex-dividend, and remember, NAB reports financial results tomorrow. Keep an eye on some of those most traded stocks from yesterday across Bell Direct. They included Dexus, DXS, Afterpay, APT and BHP. And economic news, a bit of economic news to digest today. Building permits are out for March. Consensus, or the market is expecting permits, building approvals to rise 3% following that massive 22% jump in February. So keep an eye on building construction stocks that are doing quite well, like Fletcher Building, FBU. Also keep your eyes out for CSR, Brickworks, BKW and Boral, BLD. Now, trading ideas that could be worth a look. Keep an eye on Flight Centre over the next due course, FLT. Now, the reason for this, well, it was reiterated as a Bell Potter buy, albeit with a slimmer $20 target. Now, that implies about 24% upside in a year. Now, we know that there's been some setbacks with travel, international travel, of course. We don't know when that'll kick off. But what's important to know that FLT, Flight Centre's balance sheet, is strong. They've got $1.5 billion in cash. That's enough to see it continue to keep its head above water for the next 18 months. Keep in mind, though, that FLT is in a short-term downtrend from a technical perspective. But longer term, we know Flight Centre is still looking attractive and stronger. That's if you look at the longer term averages that are playing out. And lastly, bullish charting signals have been identified in GrainCorp, GNC, Capral, CAA and West African Resources, WAF. That's according to Trading Central. I'm Jessica Reed with Bell Direct. Stay safe, happy trading and enjoy the rest of your week.